Good afternoon, everyone. Today is Friday, May 6, 2011. Let's take a look at this market here. We had a really pretty wild week, really, if you look back and take a look at what happened here. We had the news, obviously, Sunday evening that Osama had been killed, and prior to that, I had done a post on Sunday about the way that the S&P just seemed a little bit extended. We wanted to at least see a pullback before getting before making any purchases. And we don't want to just blindly buy pullbacks. I talk about that a lot. We want to see a pullback maybe to a rising 5-day moving average, but then from there we want to see a pattern of higher highs and higher lows emerge, and that of course didn't happen. Instead, we had a pause at that rising 5-day moving average. Then the 5-day moving average acted as resistance here, and then once again today. So we have a lot of cross currents, it seems like, in this market here. On the daily time frame for the S&P 500, a lot of people, myself included, have been talking about this inverted head and shoulders pattern. We did close above the neckline at 134, so that's good to see. And then we take a look at the 10-minute time frame. We're really just kind of chopping back and forth in here. We made a higher high today and possibly a higher low, so really you have to look at this as just kind of more neutral type action. And when we defer to the larger time frame, again, we have a rising 10, 20, and 50-day moving average. We found support intraday, or on a closing basis rather, on Thursday at that rising 20-day moving average. And of course the weekly time frame is still bullish looking as well. So when you look at it that way, we still want to give the benefit of the doubt to the buyers. I think that these levels near 133 next week are going to be important. That if we break below those, then we'll probably go down and fill this gap maybe near 131 or so, and that would bring about a test, a test of the 50-day moving average would come at 132. But we've had a decent rally here. We were talking about the potential for an upside target based on the inverted head and shoulders pattern. We were talking about a potential upside objective based on the measured move up at 138.5. And the whole post on Sunday was that that's a nice potential upside target, but it doesn't mean you can just blindly hold on and stick your sell orders out at 138.5. It's more important to manage risk and to be aware of the shorter term time frames, which are still giving us a little bit of uncertainty here. If we took a look at the Fibonacci levels from the mid-April lows, and we've still held on a closing basis that 50% retracement level. And again, it's just kind of mixed in here. I think that next week, this is the important upside level, and then of course this is these are the two levels, basically 133 up to 135.5, and that's a pretty wide range. And we saw a lot of ground traveled through that range both yesterday and today as well. So we have a lot of volatility in these markets. We saw crude oil really get smashed this week, and what was really a nice uptrend here, just a picture perfect pattern of higher highs and higher lows, got interrupted here. There was no support at that rising 50-day moving average. So again, these 50-day moving averages and that's where we want to look for the potential of buyers. We've seen the buyers there in the past. We know that a lot of people look at a 50-day moving average, but it's not a magic buy point. It's a point to say, okay, now we're at this 107-ish area. Let's take a look at the short-term time frame, and then on a 10-minute time frame, you look at that. What did I say? 107. Let's take a look at let's take a look at 5 days worth of data. At 107, we just continue to hammer down through that level. So obviously, again, those moving averages are just a visual reference point. It's something to compare price to. It's a constant that just gives us a reference. Possibly we're going to find some support for oil in this area, but if you're one of those types of traders that looks to buy buy for the bounce, then maybe this could be the level where it bounces from. But as we saw in silver this week, I mean, I put out a number of posts of saying here's potential levels of support, and I was very clear about what those potential levels meant, which were, again, not blind buy points, but areas to take a look closer and say, does it look like the buyers are regaining control? And nowhere in here, does it look like they regain control? We take a look at the 61.8% retracement. We really closed right on it, which is kind of interesting, and that is of the year-to-date range for silver. We've had this giant range. We came down real hard this week. Obviously, massive volume, and as a lot of people have pointed out, we've been trading more volume in silver than we have in the S&P 500, which is the SPY, that is, at least. And I'm not sure about it, but if you take the volume of the SLV, you take the volume of the AGQ, which is the double long silver, and you take the volume of the ZSL, which is a double short ETF, it seems like the tail's wagging the dog with the ETFs, that we've got so much money changing hands through these three ETFs. It's just crazy to think about how much money traded hands in silver this past week, and it'd be interesting if anyone knows the pit traded volume versus these ETFs. But anyways, there's still, we saw that this level was tested early this morning, 33. And if you take a look at today's action in silver, actually, when we take a look at the pre-market trading as well, we saw that pre-market activity in here broke a little bit of resistance and stayed above that volume-weighted average price from about 9:45 Eastern. We had the 9:30 open, and we stayed above the volume-weighted average price until we broke some support here, broke the pivot, and then stayed below the volume-weighted average price throughout the session. So still no clear signs that the buyers are stepping up and really gaining control. In fact, even though we closed up 76 cents on the ETF, and I realize there's a difference between when the pit traded silver closes and the ETF, but if you're trading the ETF, that's what you should be most concerned about. But the point is, we closed below that volume weighted average price for a 1 day, for the 2 day volume weighted average price, and that's where we found some resistance in there today. But the point was not necessarily just about silver, but it's about trying to pick turning points. It's a very dangerous way to make a living. When you can get it right, it can be hugely rewarding. You can get these massive snapbacks, but the longer they take, it seems that the chances become less likely that you're going to get that significant, meaningful bounce. Don't forget, as always, that first of all, there's a couple of phrases that I like to say. If they don't scare you out, they'll generally wear you out. And I guess that was the one I wanted to say. There weren't two. But another appropriate one would be, well, no, never mind. Anyways, let's go take a look at the NASDAQ. The Qs, obviously, they held this important level, this 58.30 level. That's the level that we've been kind of keeping an eye on. We're above a rising 20-day moving average. And when we take a look in here, what's been an important level this week intraday was this 58.80, and we got above it briefly yesterday. We got above it a little bit more today, and it looked pretty enticing when it was up there, looking like, hey, maybe this market is going to turn the corner. But again, you have to listen to the message of the market, and when that 58.50, it came back down very quickly, and we've still got in the NASDAQ, we've got a declining 5-day moving average. So I think that next week the levels of importance here are obviously going to be this week's lows, about 58. We just call it 58 bucks. If we break down below 58, then perhaps we're going to drop down. Well, you'll have the 20-day moving average there as well. So if we break below and hold below that 58, it's going to be not only support, traditional support from what we've seen in terms of trading this week and this prior peak over here, but it's also going to be that rising 20-day moving average. So that'll take on a little bit more significance. So breaking below 58 next week, I think, is something that you want to pay attention to. You don't want to see these red candles like this where it opens, rallies a bit, and then closes with a big red candle. But you can't take a look at one candle so much either. I mean, again, you back it up to the weekly time frame, we're still in a significant uptrend here. Possibly, you can always make a case that from this failed move, we could call this a failed breakout, could come a fast move lower, and that's what risk management is for. It's not about trying to pick the top and short the top. That's, to me, the fool's game. The better game is to say, what is the clear message message, and right now we don't have a clear message. I think next week back above these highs, 59.30, that can hold for a half hour or more, above 59.30, then we should be able to continue to go make some progress on this weekly uptrend that's still intact here. So again, we're kind of at a funky area because we've got this massive volatility in the commodities. It makes you look at it and say, we're getting these sell-offs in crude. We're getting these sell-offs in little bit in, not so much gold, but and gold was up today. But gold's still obviously in a healthy uptrend, and at this trend line actually from the year-to-date level. But as we saw in silver, I mean, those trend lines really don't mean a lot unless they hold. But anyways, gold is still in a primary uptrend. I mean, there's you can't really argue that. We had a steeper pullback in here, and it held up better than silver. But is gold going to be the next commodity? We've seen UNG, that is natural gas. I pointed out on I did a Chartly chart. Let me just add, let's go to 500. I think I needed like 800, 700 days to make the point. And the point was, so let me go back maybe 900 days to make the point. And here's where that point is. This is the last time the UNG closed above that 200-day moving average, which was basically July of 2008. And since then, this thing has just been, every rally has been squashed in there, and we closed above that 200-day moving average I think once this week. Let's kind of let me do this. Let me just go back. I made that point, so let's just make this 300 days. But we closed above that one day, or right on it one day this week, and natural gas sold right off as well. So you look at the way that money is moving throughout these markets, and we have Greece maybe gonna leave the euro and that sort of thing. You look at the euro versus the US dollar, it's been in this massive uptrend this year, and here's what probably represents the trend line best, and that's that 50-day moving average. We had two rough days in the euro versus the US dollar, but still obviously it's in a massive uptrend here. Still, we've got a nice pattern really of higher highs and higher lows, and when that pattern of higher highs and higher lows gets extended, well, you're going to see deeper pullbacks. And in the euro, the 20-day moving average has been generally pretty good. Now perhaps it's going to settle in, find some support at the 50-day moving average, which is kind of an important level from prior resistance in here as well. So a little bit further weakness in the euro next week, and that would obviously be the equivalent of the US dollar continuing to rally, perhaps up to that 50-day moving average as well, and some prior support at 2160 in the UUP. But these trends are still, I mean, the US dollar is still clearly in a major decline here, and we're getting a bounce, as upside trader would say, cute little rally there in the dollar. But again, let's just take a look at some of these other equities markets. The Russell 2000 had a little bit deeper pullback than the rest of these markets, kind of closing right on this trend line, right at that 50-day moving average. As we know, this market has really been more of the leader recently. 83 has been an important level. We did close above that, and we do still have a pattern of higher highs and higher lows. When we look at the 30-minute time frame, though, this sell-off, as compared to, let's take a look at the prior sell-off. We had this rally from 77 and change up to about 86 or so, and we had seen that rally find support at this 50% retracement level. Now, this most recent rally and retracement, we've seen, so if we take it from these lows to that recent high, we're closing below the 61.8% retracement, which says that the sellers are more persistent in here. It's not bouncing back, and a lot of people consider that to be a failed move because it breaks that 61.8%. You can see that trend line a little bit more clearly here when we look at 65-minute candles, and we can see that we've got a declining 5-day moving average, which has been holding as resistance as well, and that becomes more clear here on the 30-minute time frame. So we've got again a mixed message. I think next week in the Russell probably 84 and a half. Zor Trades had mentioned today, and I retweeted him that you get a bounce in here. What are people going to be talking about next? Is the possibility of if we get a bounce maybe up towards 86 and a half, that you're looking at what could look like a head and shoulders topping formation, and it's always good to anticipate those types of movements. That is, what could the next bigger wave be setting up? Could this be just a little bounce that sets up a lower high before this market tops out? Who knows? I mean, we've got this much larger uptrend. Obviously, we've had all-time highs. Month of May is showing red candle in here so far, but we're only 5 trading days into it. We take a look at the semiconductors. Now, this group has been held back here pretty firmly at about $36.80. It made it up through that level today, but couldn't hold on to the gains. So when we look at where we are here on the semiconductors, again, this level, it's been an important level in the past. We've noted this prior support in here, and then if it can get it back above here, perhaps the next upward objective would be up near this area where we've seen resistance in 2007. Again, you don't just buy that breakout and expect that it's automatically going to go. Right now, it's looking like, well, it broke out, it came back in, so for now you look at it as a failed breakout. Doesn't mean it's going to be the end of the world, but it does mean we have to be on alert for the potential of, from a failed breakout, in a market that's had a really strong rally, off these lows of 23 up to 36, 50% over the last, since September of last year. A failed breakout at this point could run the possibility of, from a failed move comes a fast move. Now, I don't see that as a likely scenario, but it's something to be aware of. In particular, I think next week if we break down below 38.75-ish, if we pulled back down into there, it would get me a little more cautious and think maybe we're just a little bit more neutral. But breaking that level could bring about some further damage and maybe a bigger move back down to this what had been resisted, an important level this year, which I think will still be important. That's 35 basically. We had support in there, we had resistance. We've now got that 50-day moving average in that level, so that's going to be the bigger level in 35. Maybe we get a pull back down towards 35. What would it take to get there? Probably move below 35.75. So it's not looking horrible, but we know things can change rapidly. This, we've seen a rapid change in the nature of silver. Now, this is a different story because it basically had gone parabolic. But the point is, crude oil was in what looked like a nice constructive uptrend, and not all these pullbacks are going to find support where you expect them to. They're not always going to behave well. They're not going to be, well, this prior resistance was support before, and we have the 50-day moving average. So let me just clean that up a little bit. I'm sure there were a lot of people looking at crude going, hey, this resistance was support there. It should be support again. It's the 50-day moving average. Let's buy that 107 level. But obviously 107 was not an area where the buyers showed up. There, we had strong selling in there. So again, the point is we have the possibility that maybe this turmoil and all this money moving around in all these other markets could spill over into equities next week. I don't want to raise any panic or concern, but as always, the number one job for us is risk management and make sure we don't expose ourselves to a lot of risk. The financials, this group is, they rallied up to that. A lot of people were expecting maybe it was going to break this bearish flag and then break down. It continued to rally up a little bit though, found resistance at the declining 50-day moving average. We have a declining 20-day moving average. The 10's kind of flattened out. The big level remains 1580 in the financials. They're showing resistance at the declining 5-day moving average. They're getting gappy in here, and that's obviously going to be the news related. And you have to ask yourself, is it going to be enough to save these financials that Citigroup is doing a 1-for-10 reversal next week? I don't think so, but next week if you get Citigroup up through what will be 46, $47 a share, maybe that's going to be worth moving, and or it's going to help move the financials a little bit. I personally don't think that it's going to. I think these financials are really probably more neutral to negative than outright negative, and I say that because again the weekly chart, they've done nothing for basically nothing for the last year and a half or so, and I continue to believe they're just not my thing to trade. Is what I should leave it at, I suppose. But again, we had massive volatility in the markets this week, and I don't think that we should expect things to just settle down real quickly next week. If you've got a stock you want me to take a look at, go ahead and type it in. Otherwise, I'm going to talk about just a couple stocks here. I had mentioned the other day Sprint. I still think Sprint looks good. I do not currently have a position in it. I decided to get out of it, but I still like the way it's set up, and I'll be, this one will be front and center for me next week, and particularly if it can get up through what's been established here over the last 2 weeks as an important level of resistance at 535. You could say, well, is it going to make this cup and a handle, or is that a shoulder, a head, and a shoulder here? Either way, 535 is the level it looks like it has to clear. If you're in it based on when I had spoken about it the other day at 520, I still think about 505 is the proper place for a stop. But again, I don't have that kind of patience to hold something that's just really not doing a whole lot. So it looks like just asked me to take a look at that, and I did. So the other one I'd mentioned today, I don't own it. I did buy some call options. I bought some of the what did I buy? The May 28 calls just to start out a position. I got filled as the stock pulled back to volume weighted average price right here. But Tesla, this one, they reported earnings I think 2 days ago or maybe yesterday. I've spoken at length about the short position in here that since the beginning of the year, I think the shorts added maybe 8 million shares. That's the volume weighted average price since the beginning of the year. In this area, they added that is since that March 31st gap through April 15th, I think they added another 2 million shares, and you can see the volume weighted average price is important in there. But we've got a rising 10, 20, and 50 week day moving average, and what we've got when we take a look at a 30-minute time frame, well, let's do 65 just to get that full gap in there. But here again is, since this event, there's the volume weighted average price. Now, it struggled with it, but on balance, it's holding above it. And when we take a look at what we have here, since that gap higher, we've got this head, shoulder, and other shoulder. So shoulder, head, shoulder rather. And I think that it's probably going to take a move up through 28 for the real momentum to begin. I wanted to have some exposure, so I decided I would buy some of the call options just to have a position, just to, in case it gaps up or whatever. I don't want to own the stock because if the shorts have it right, who knows? Maybe it opens at 23 on Monday, and I just it's about risk management always. And I think I paid 70 cents for those calls, and they closed it at 50 cents. So anyways, let's go back to Tesla. So it looks like maybe Tesla above $28 a share. You can see it kind of battled this 5-day moving average throughout the week, got back above it. It's still declining. So maybe Monday or Tuesday is when this stock begins to kind of look a little bit better and potentially move higher and make those shorts feel some of that pain. So we've got 28, and then we've got 28, and then probably 29 is another big level too. You get up through there, then I don't know why the shorts would continue to hold unless they know something, and that's quite possible. The shorts aren't idiots. They they have a lot of power to maybe manipulate things lower at times as well. That was certainly what a lot of people thought was silver this week. Let's see, about a 44. How about a look at UXG? I sold some June 10 puts at 260, and am I right or nuts to think that gold is cheap here? I mean, I don't know. It's I don't know. Gold always seems expensive to me because I don't use it for anything. I don't, it's one of those philosophical debates. What is the value of gold? Personally, I don't. I have a little bit. I bought it 2 years. I bought it over in here. I think I bought it over back in '08. Bought it here. I remember because I took physical delivery, and if I hadn't taken physical delivery, I know I would have sold in here. But I bought some at that 85 level. I think I forgot where I sold it. Maybe 120. Thought I was a hero, but I still have a little bit of that left. And I'm just always. I love that phrase that Art Cashin says. Always have enough gold on hand to bribe the border guards. And it's for when shit hits the fan, basically. If you live in, I don't know, maybe Pakistan, it would be more relevant. But gold, I don't know. Do I think you're nuts for thinking gold is cheap? UXG looks broken to me. The stock broke some important support in here on the weekly chart. It's still in a longer term uptrend. So selling puts is a good way to establish a position if it continues lower. So I don't think you're nuts. You sold the June 10s. I think there's a lot more risk in these metals than people realize, and that silver is a good reminder of that. I don't think you're nuts, but I don't know. To me, it always just seems like a better strategy. If you like UXG, you buy UXG. When it rallies, you sell some covered calls. You don't buy them at that same time. Or maybe you sell the June 6 puts so that you would take delivery at a lower price. But those aren't my strategies. Someone like Stephen Place or Adam Warner, I think would be better to ask about that kind of strategy. But based on the chart, I don't really like it. I think that you've got now the potential for stronger resistance up near 825 to 875, and if it can convincingly get through there, then maybe it recovers. But I'd say it's probably more neutral than anything. By the way, before people tune out, if they're not interested in these stocks that I'm talking about, happy Mother's Day to all the moms out there, especially my mom. So let's take a look for Angry Bear at OPTR. OPTR, what's the average daily volume here? About 401,000 shares. So, this stock, let's just back it up on the weekly. It's a pharmaceutical, so I don't know what's going on with this chart. It looks like some real bad print back in 2007, so we can kind of rescale it to get a better look. And in here, it's on the weekly chart, it's in a nice uptrend, and it's been stair-stepping higher, prior levels of resistance holding a support. So I think you're at a kind of an important level in here. It looks like a stock you need a lot of patience with, that it just kind of grinds higher. It's not really what I would consider to be what looks like a good trading stock, and it has that pattern of grinding higher and then grinding lower. Well, it came down a little bit faster over here, but back to the daily chart, it's trying to hold that 100-day moving average. It gapped up and failed there, so back above, if it can recover maybe 13, you'd get some more momentum into it. If you're going to be a buyer in here, it's because you like the company and you see some value in this pullback. But other than that, the chart really looks a little bit more neutral than anything to me here. Doesn't look like doesn't look like a short sale, doesn't look like a screaming buy, but maybe momentum back above $13 a share or so. How about a look at Cisco for rate Burgeld. Cisco's, you look at the week, it's battling this 50-day moving average. We've got that 10 up through the 20. I still think Cisco's a dangerous stock. The weekly chart, you could still see it down at 14, $15 a share, I think, but it is finding support kind of in this general area where we had seen prior resistance holding as support here. If you're an investor who's looking to establish a position in a company that's maybe going to turn themselves around, is the way Cisco seems. I don't know a lot about it fundamentally, but I know that the last three earnings quarters have been disasters. That the stock has gapped lower, and maybe even I don't know if that was an earnings report as well. But the earnings have been really terrible events for this, so I'd be aware of that. But it does seem to be trying to find some support, carve out some support in here, and this which is now the 50-day moving average as well, looks like an important level that we've got a rising 5, 10, and 20-day moving average, so that's the beginnings of something that looks good. And we have, I think, if you're going to buy it for that break above the 50-day moving average, that a stop near 1720 maybe would be a decent place to protect yourself, somewhere down in here. I wouldn't give it a lot of room though, because the weekly chart is still busted, and again, like for most of these, if they don't scare you out, they're generally going to wear you out. So Cisco it just always seems like yesterday's news to me. Maybe they've got something going on there that's going to change things around, but we've still got the declining 100, 150, 200-day moving average. So really kind of a mess, I think, Cisco. There's I think better opportunities out there. Dan wants me to take a look at Amgen. Someone asked me about Amgen, I think, in the chat room yesterday. It's up against, so it's battling this level at 58, 58 and a half, which has been important to it for pretty much the last year. If you take a look at, where we came down, almost exactly a year ago. This has been a level that's been, the stock comes up, test it, and then got smashed. Now it's expended not a whole lot of energy, but it's run from 51 to 58 basically. So it's run 7 points, or what is that, 15% here uninterrupted. We've got this big cluster of moving averages down here. On the weekly time frame, 58 is clearly a big level, so maybe long small pieces of it, thinking that it could break out and then head up towards 61, 62. I think it would be better if this stock maybe got hit back down towards that cluster of moving averages, and if you're looking to build a position, you buy some in there as that's if it were to pull back once again, maybe towards 55, and then so you have another pullback like this, and then buy it on the upswing, because it just seems like maybe it needs another little refresher before it can really build the energy to push beyond this 58 level. How about RTIX? RTI Biologics here on the weekly chart. Looks like this thing has had some pretty serious troubles in 2008. Maybe they're healing. We'll see, but this has been, three's been a big level for it. It was really kind of, you draw a line straight across. It was a big level back in '09 as resistance, then became support. That support failed. Now we're back up to it again and have backed off down to 270. We've got a rising 10, 20, 30, 40 week moving average, so it's at least becoming more neutral in here, but it looks like it tried to break out this week, but got shoved back down. And from that failed breakout came this fast move lower back into the range. So it's going to really need to kind of heal once again and get back up. If this sell-off is a fake out, then maybe back above 295 you give it a chance again. But it seems to me right now like a failed breakout, that they trapped the longs in there, the sellers came back in, took advantage of those prices, pushed it down, and now it's just back into this long boring kind of range that it's been in. So I'd maybe set an alert for about 290 and then decide to kind of take a closer look and see if it could recover up through there, and then work through that $3 level, and then maybe move up to some higher levels, because maybe they've got something some kind of good science going on, but the chart doesn't reflect that story right now. The buyers don't appear to have been able to take control. How about I look por favor at EPU, which is appropriate, por favor, with Peruvian. And Peru, had a great uptrend last week. This prior support. Now, you look at this, we've got a declining 50-day moving average. Generally, rallies, do not hold with a declining 50-day moving average. And we have this prior level of support. So we've got this prior band of support in here that broke down real hard. The market recovered nicely, and it's back up through there. So I think that you're going to have better opportunities to buy this at lower prices, maybe towards 42, and then if it can create another higher low and then work through this 45 and a half-ish area, then we could get it going back up again. But right now, it's right at that declining trend line. So you're likely, I think, to encounter resistance in this area. Prior support tends to act as resistance. How would you feel if you were holding it from back in here? If you bought it in this area and then it breaks down, it rallies back up, what you'd be thinking my opinion is if you bought it in here and you were dumb enough to still be holding it, you'd probably be thinking, hey, I got to get out. Now is my chance to break even. We've got that declining trend line and big prior level of support. So, Chart Diva, thank you for the compliment. And everybody, hope you had a good week. And we'll, next week, I think, again, we're going to have a lot more volatility. So, just keep in mind that as Upside Trader mentioned a couple times, I think on Wednesday, things seem to be afoot. So I'll leave it with his words. Thanks.